Background and nature of the business of the companies: Ajinomoto, Cocoland, Nestle. The first company is Ajinomoto. Ajinomoto Malaysia Berhad has been started their business operation around 1961 as the producer of Ajinomoto monosodium glutamate. It is the first Japanese company that built up in Malaysia. Ajinomoto Malaysia Berhad is including in food and seasoning manufacturer as the name brand has been grown as a trusted brand by the Malaysians since for decades. The product was initiated by Dr. Kokanai Ikada, which discovering the product taste to have another taste in his bowl of boiled tofu in komudashi, while savoring the broth, which it will be taste different from salty, sour, sweet, and bitter. Furthermore, his idea was encouraged by the first doctor medicine in Japan, with the hypothesis of good taste will stimulate digestion. Dr. Ikada found the taste he wanted in glutamic acid and named it as Taste Umami. The second company is Cocoland. Cocoland Holding Berhad is an investment holding company that engages in the manufacturing and trading process and preserve fruits, foods, and other foodstuffs that related primarily in Malaysia. Cocoland Industri Bersendirian Berhad is located at the Rawang and Kepong, Selangor, Darul Ihsan, as the Cocoland Holding Group principal manufacturing arm. Cocoland was started by two brothers in Klang Village with just small-time vendors selling the banana fritter and deep-fried snacks. Cocoland is a company that offers several products such as candies, snacks, cookies, chocolates, wafers, nuts, soft drinks, gummies, and crackers. The company was including in the manufacturing, trading, and investment holding. Cocoland has some subsidiaries in Malaysia, which is LB Foods Sdn Bhd as the wholesale and retail of preserved and processed foods, P plus Q Sdn Bhd as the manufacturing foodstuffs and fruit juice, and Lot 100 Food Co. Ltd as the wholesaling, export, and import of the gummy product and others. The last company is Nestle. Nestle Malaysia Berhad is the company of Malaysia-based health, nutrition and wellness company. It was founded in 1866 as a Swiss company by Henry Nestle. The Nestle products have been marketed in 130 countries across the world. It is also an investment in the holding company. The segmentation of the company is including in the food and beverage, and other that include in the nutrition and Nestle Professional. Nestle has several subsidiaries, which are Nestle Products Sdn Bhd as it is a marketing and sales of powdered milk and drink, ice cream, instant food, liquid milk, and juices and beverages such as chocolate confectionery products, culinary products, instant food noodles, yogurts, cereal, and other related products. The other of Nestle subsidiaries is Nestle Manufacturing Malaysia Sdn Bhd, which is manufactured and sell related products exclude the chocolate confectionery product, while other subsidiaries in Nestle, which is Nestle Asian Malaysia Sdn Bhd, is as the manufacturing and sell the chocolate confectionery products.
Moving on, I will talk about the economic outlook of industry. For Ajinomoto Berhad, the outlook is to stay focused in offering product and service that meet the industry and the customer expectation. As for Cocoland, the outlook is to develop new product with various flavor as well as packaging design and size to cater the different market segment. While for the Nestle Berhad, the outlook is to working on fulfilling the customer health and wellness.
Next, we'll be looking into 5 Nestle's financial ratios, which are liquidity, leverage, management efficiency, profitability, and market value ratios. The first one is liquidity ratio. By looking at the current ratio, the Ajinomoto is very capable of managing the current debt, as it being shown in the table above. As for 4 consecutive years, the current ratio are increasing from 2015 to 2018. Similarly, Cocoland also show a very good indicator that they are capable of managing the current debt, and the best year is in 2019 which is Rm 7.5 ringgit. On the other hand, Nestle is not very good at managing the current debt, as it showed that for the past 5 years, the current ratio are all below 1. Next is the quick ratio. Without taking inventories under consideration, Ajinomoto is still good at managing the current debt, as all the ratios are above 1. Similarly, Cocoland are also good managing the current debt, with the excluding of the selling of the inventories. Meanwhile, with the excluding of the reselling of the inventories, Nestle cannot cover the current debt, especially on 2015, which is 12 cents per current asset for every RM1 current debt. However, in 2019, Nestle shows improvement on the liquidity, which is 13 cents to 31 cents.
Next, there are three ratios in leverage ratio. First, debt to asset ratio, debt to equity ratio, debt to capital ratio. The first ratio is debt to asset ratio. Based on the figure, debt to asset ratio analysis is to analyze the stability of company's financial on the fund borrowed over the asset. The ratio analysis of Ajinomoto shows improvement over the year 2015 to 2018, but slightly down in the year 2019. Cocoland have uncertainty of financial stability over the year 2015 to 2019, but improved drastically in the year 2019. For Nestle, the company have increased their fund over the year 2015 to 2018, but slightly decreased in the year 2000. Next ratio is debt to equity ratio. Based on the figure, debt to equity ratio analysis is to analyze the indication percentage of total equity of the company financed from their debt. Ajinomoto ratio analysis shows an improvement financial stability over the year 2015 to 2018, but slightly down in the year 2019. But the ratio analysis of Cocoland shows uncertainty financial stability. For Nestle have a very poor ability managing their business debt over the limited equity, which the ratio increased from 2015 to 2018 but only decreased 25.05% in the year 2019. The last ratio is debt to capital ratio. Based on the figure, debt to capital ratio analysis is to analyze the ability of a company to control their debt over the limited capital. Ajinomoto ratio analysis shows increased ability during the year 2015 to 2018, but slightly decreased in the year 2019. The ratio analysis of Cocoland has uncertainty financial stability to control their debt by using the limited capital. For Nestle, it has very poor ability on controlling the debt over the capital, although it improved 1.41% during the year 2019.
Next, for the profitability in terms of operating profit margin ratio, the efficiency of Ajinomoto in earning power from its current operation is slightly improving from 2018 to 2019, while the base year is in 2017. Whilst the efficiency of Cocoland in earning power from its profit a company makes on a dollar of sales after paying variable costs seem to be declined in 2018 to 2019, while the base year is in 2017. Similarly, the earning power of Nestle seemed to be decreased in 2019, which might be due to increasing in operating costs or a poor management by Nestle in 2019, while the base year is in 2018. For the net income margin ratio, the trend of net income margin of Ajinomoto is decreasing since 2018 until 2019, indicates that the company is inefficient in converting the sales into actual profit, while most efficient is in 2017. In contrast, there is an improvement in both of Cocoland and Nestle. Net income margin in 2019 indicates that this both company is efficient to manage their company's costs. Both of Coca-Cola and Nestle performed better in 2016. As for the return on asset, Ajinomoto seemed to be more efficient in using their asset to generate revenue in 2019, since the return on asset of the company increased while performed the best in 2017. Similarly, both of Coca-Cola and Nestle also having an increased trend of return on asset from 2018 to 2019 implies that both of these companies using their asset efficiently to generate profit. Besides, both of Coca-Cola and Nestle are most efficient in 2016 on turning asset into profit. For the return on equity, the trend of return on equity of Ajinomoto is decreasing from 2018 to 2019, indicates that Ajinomoto is not efficient in using their equity financing to generate profit in 2019, while the best is in 2017. Coca-Cola return on equity ratio is volatility fluctuates while seem to be improved in 2019, whilst the trend of return on equity of Nestle seemed to be improved in 2019, which indicates that efficient usage of equity capital by Nestle in 2019.
Next, management efficiency. There are three ratios being used to evaluate the management efficiency. First and foremost, asset turnover. The efficiency of Ajinomoto in using its asset to generate revenue slightly improving in the year 2019, but the best year is during 2016. During 2019, Coca-Cola slightly improved compared to 2018, and the most efficient is during 2015. Next, fluctuation trend, whereby the efficiency of Nestle decreased during the year 2018, meanwhile in the year 2019 shows the poor efficiency. Next is inventory turnover. The efficiency of Ajinomoto to turn over its inventory improved over 5 years, whereby the year 2019 is the highest. As for Coca-Cola, the best year is during 2019, while the lowest is during 2017. In 2019, the efficiency of Nestle in turning over the inventory slightly declined. However, the most efficient is during the year 2015. For the receivable turnover, the efficiency of Ajinomoto to collect cash of the credit sales during the year 2018 and 2019 remained constant, but the most efficient year of the Ajinomoto to collect its credit account is during 2016. The efficiency of Coca-Cola in collecting cash decreased moderately in the year 2019, but the best year is during 2015. For Nestle, 2019 shows a decrement, but the most faster and efficient year of the Nestle to collect cash is during 2016.
Next is market ratio. The book value per share ratio of Ajinomoto is declined in 2019 as the ability to generate profits and use them to buy assets or reduce liability was decreased. In contrast, the book value per share ratio of Coca-Cola and Nestle increased in 2019 by 0.11 times and 0.39 times respectively. The dividend yield of Ajinomoto is decreased in 2019 means that their dividend payment was decreased. The dividend yield of Coca-Cola also decreased in 2019 by 4.71 times, where the highest is in 2015 for the recent 5 years. In contrast, the dividend paid by Nestle is slightly increased to 1.9 times in year 2019. Earnings per share ratios of Ajinomoto shows that the company's distribution of profits remain the same when it comes to year 2019. On the other hand, the distribution of profits per share in Coca-Cola increased in year 2019, but the amount is still not satisfied as it lower than 1. As for Nestle, the distribution of profit in year 2019 has increased as they paid highest profit to the shareholders in year 2019. The price per earnings ratio of Ajinomoto is decreased in 2019, where the highest is in 2018 for the recent 5 years. For Cocoland, it shows that their performance is declined when it comes to year 2018 and continues to decline in year 2019. While the price per earnings ratio of Nestle shows that the willingness of the Nestle's investors to pay their share is decreased in year 2019 from 2018.
Next is the company business model. For Ajinomoto, they aim to be a solution providing company for food and health issues by unlocking power of amino acids. This means that it promotes their brand as a delicious spice and at the same time improving daily eating habits of all ages. They focus on improving people's lifestyle and diet related to food and health through their products. They conduct a group management with a policy that states they are concentrating most of their resources in solving food and health issues. With adding customer value in their management plan, they are certain they will improve their corporate value and align with their brand value. In that in mind, they had planned the target for 2030. It includes with two phases. For the first phase, they will focus on strengthening health promotion and unit price as they are trying to pursue taste that is compatible with consumer lifestyle. They estimate their sales growth rate increasing from 65% to 75% for the final year of 2022. For the second phase, they will focus more on management resource and rebuild their business profile while constructing their non-core business. For Cocoland, they expect to expand its footprint more in Indonesia on retailing of its own brand products such as gummies and choco pies. Contribution to revenue from its core businesses in Australia, Vietnam and South Korea aims to hit a higher share of overseas sales. The, the organizational objective of Cocoland is to distinguish itself with high quality goods to continue leading the group toward better performance. Quality assurance is important to ensure that only quality products are available to supply to customers. They are also engaged in understanding the current customers' needs and trends. The group have launched a premium product which has been called a fresh gummy that promotes a vitamins, calcium and collagen enhancement. It has been advertised through online e-commerce platform. In the near future, Cocoland plans to allocate more on advertising and promotional resource of a new product to its existing market inside and outside Malaysia. For Nestle, they aspire to deliver a portfolio of products that grow with the needs of customers, provide healthy nutrition and delight the senses while promoting to a better, more fulfilling life and healthier environment. It guides the decision that Nestle made and formed a portfolio that focuses on product growth, innovation, and acquisition or partnership of a company. Nestle's current strategy is applying their nutritional expertise to improve people and pets' health and well-being. Other than that, Nestle is trying to meet the needs of a modern consumer with balanced, tasty, convenient products for time-constrained or active lifestyle. After that, they are trying to bring premium food innovation to market, which has been shaped according to consumer insights, innovation nutrition research, and culinary excellence with offering a wide array of plant-based food. Next is industry comparison analysis. First is liquidity. Ajinomoto and Cocoland are very good at covering the current debt, as it has been shown by the current ratio table above. It seems that the two companies' current ratio are all above 1. It indicates that for every 1 ringgit current debt, the companies can manage it for the past 5 years. On the other hand, Nestle is not very good at covering the current debt compared to Ajinomoto and Cocoland, as it has been shown at the current ratio table above. It shows that for the past 5 years, Nestle current ratio are all below 1. It shows that 2 of the 3 companies are very good at handling their current debt with using their current asset. Without taking inventories into consideration, Ajinomoto and Cocolan still managed to cover their current debt as the two of the companies' quick ratio are all above 1. It shows that the two companies can liquidate their assets effectively. Meanwhile, Nestle is not really good in managing the current debt, especially without taking inventory into consideration. This indicates that Ajinomoto and Cocolan are still able to cover the current debt without including of the inventories.
Next, industry comparison analysis of leverage ratio. Overall debt-to-asset ratio analysis shows Ajinomoto's ratio is more stable on the financial stability on the fund borrowed over the assets than two other companies, which the financial stability shows improvement over the year 2015-2018 but slightly down in the year 2019. Differ with ratio analysis of Cocolan have uncertainty of financial stability but improved during the year 2019, although not good as Ajinomoto. Compared to Nestle, the company have very poor financial stability than other two companies, although it has been slightly improved in the year 2019. Compared to Nestle, the company has very poor financial stability than the other two companies, although it has been slightly improved in the year 2019. Besides, overall debt-to-equity ratio analysis shows that Ajinomoto have a good managing the debt over the equity compared to other companies. Ajinomoto have been improved the financial stability debt over the equity over the year 2015 to 2018 and slightly down in the year 2019. Differ with the ratio analysis of Cocolan, which has uncertainty stable on managing the debt over the equity but highly improvement in the year 2019, although still poor compared with Ajinomoto. Compared to Nestle, it has very poor ability managing the business debt over the limited equity, which higher debt than the other companies, although it slightly improved in the year 2019. Next, overall debt-to-capital ratio analysis shows Ajinomoto have a good control their debt over the limited capital than the other companies. Ajinomoto ratio analysis shows more stable on financial, although slightly down during the year 2019 but still good compared to the others. Differ with Cocolan's ratio analysis, which has uncertainty ability to control their debt over the limited capital but good compared to Nestle. Compared to Nestle, it has very poor ability on controlling the debt over the capital among the others, although it has been improved the ability during the year 2019.
For the management efficiency in terms of the asset turnover, Nestle has a higher asset turnover during the period of 2015 to 2019 compared to Ajinomoto and Cocolan. This demonstrates that Nestle is more productively and efficiently in using its asset compared to Ajinomoto and Cocolan, although its ratio is slightly declined during the year 2019. For the inventory turnover, Nestle has a higher ratio compared to Ajinomoto and Cocolan. The higher inventory turnover indicates the higher liquidity of the inventory and the faster the company sells its inventory. To summarize, Nestle has a strong sales as well as more effective in managing the sales of its inventory when compared to Ajinomoto and Cocolan. For the receivable turnover, Nestle has a higher ratio compared to Ajinomoto and Cocolan over the 5 years. The higher ratio of the receivable turnover indicates that the faster for the company to collect the cash on the credit sales from its trade debtors. Hence, it can be concluded that Nestle is more efficient in collecting its credit sales as compared to Ajinomoto and Cocolan.
Next, for the profitability in operating profit margin ratio, Nestle is having a high operating ratio margin compared to Ajinomoto and Cocolan in 2019. This indicates Nestle is able to generate a high profit even after paying the variable cost of production as compared to Ajinomoto and Cocolan. Nestle show a continued increase in the operating profit margin ratio from 2015 to 2018, which indicates the profitability of Nestle is improving. In terms of net income margin, Cocolan is ranked higher compared to Ajinomoto and Nestle in 2019. This implies that Cocolan is able to effectively control its costs as well as having a strong pricing strategy and efficient management compared to Ajinomoto and Nestle in 2019. Besides, for the return on asset, Nestle almost having the most highest and stable return on asset for the consecutive 5 years compared to Ajinomoto and Cocolan. This indicates that Nestle is earning more money on less investment and found way to operate more efficiently from Ajinomoto and Cocolan for all the 5 years. While in terms of return on equity, Nestle has the highest return on equity during the period of the year from 2015 to 2019 compared to Ajinomoto and Cocolan. This could indicates that Nestle company's management is more efficient in utilizing investment financing to grow their business and is more likely to provide better return to their investor as compared to Ajinomoto and Cocolan in the consecutive 5 years.
Next is market ratio. Firstly, the book value per share ratio shows that Ajinomoto have the highest amount, which indicates that Ajinomoto can generate higher profits and use them to buy more assets or reduce their liabilities compared to Cocolan and Nestle for the recent 5 years. Next, Cocolan has the highest dividend yield when compared to Ajinomoto and Nestle for the 5 years, except for year 2016, where Nestle has the highest result of dividend yield. As a result, Cocolan has paid high dividend per number of shares to their shareholders for the recent 5 years. Nestle has good result in earnings per share ratio, as its earnings per share ratio is more than 1 for year 2015 to 2019, but earnings per share ratios of Ajinomoto and Cocolan is less than 1, except for earnings per share ratios of Ajinomoto in year 2017. This shows that Nestle are able to distribute more profits to their shareholders compared to Ajinomoto and Cocolan. The price per earning ratios between Ajinomoto, Cocolan and Nestle shows Nestle has the highest amount for the recent 5 years. This can be indicated that investors of Nestle are willing to pay high per Rm1 ringgit of Nestle's earnings and has a great future performance compared to Ajinomoto and Cocolan.
The next section is conclusion. Ajinomoto Malaysia Berhad operated since 1961 and the first Japanese company built in Malaysia. Cocolan Holding Berhad is an investment holding company that engages in the manufacturing and trading of processed and preserved fruit, food and other foods that related primarily in Malaysia. While Nestle Malaysia Berhad is a health, nutrition and well-based company, it has been operated since 1866. Nestle, Ajinomoto and Cocolan operate under the consumer products and services industry in the segment of food and beverage. The best strategies that can be implemented by the three companies are to keep on adding value to their product quality, variety and services, as well as assurance about the environmental impact of the food production. Ajinomoto aims to be a company for food and health issue. Cocolan plans to contribute the revenue from its core business in Australia, Vietnam and South Korea to aim for a higher share of overseas sales, while Nestle aspires to deliver a portfolio of products that grow with the needs of customers, providing nutrition and delight. For the liquidity ratio, Ajinomoto and Cocolan are good at covering their current debt by using their current asset and liquid asset, where Ajinomoto has the highest number for both ratio for the 5 years, while Nestle cannot cover their current liability with or without the inventory. Next is leverage ratio. Nestle has a very poor financial stability and poor in managing their business debt over its asset, equity and capital, where Ajinomoto show the lowest amount of its leverage ratio, which indicate that they can manage their debt effectively. For the management efficiency, Nestle has a better and high efficiency as they manage to turn over their asset and inventory frequently in a year. However, they take many days to collect their cash from the credit sales compared to Ajinomoto and Cocolan. For the profitability in terms of operating profit margin, return on asset and return on equity shows that Nestlé has the highest ratio among the three companies, while Cocoland is more efficient in controlling its costs. To conclude, Nestlé is more profitable than Ajinomoto and Cocoland. The market value, Ajinomoto is able to generate profit and use this profit to buy more asset or reduce liability, as Ajinomoto has the highest book value per share, while Cocoland has the highest dividend yield for the recent 5 years. Nestlé is good for both earning per share and price per earning. Hence, Nestlé has more profit to distribute to its shareholders.
For the recommendation, as the liquidity ratio of Nestlé is less than 1, they are recommended that the company has to make more efforts in improving the level of current asset and liquid asset. Based on the leverage ratio of Nestlé, they are recommended to decrease its total financial leverage by directly paying off any present debts and obligations on its statement of financial position. For the management efficiency ratio, Ajinomoto and Cocoland recommended to increase their revenue. According to the inventory turnover, all three companies are recommended to maintain their strategy in turn over their inventory, or they can use other ways to improve their inventory turnover. In addition, Nestlé has the highest receivable turnover. They are recommended to improve their receivable turnover by building strong client relationships. For the profitability, Ajinomoto and Cocoland should improve its effectiveness and efficiency in generating the profit. Next, Cocoland and Nestlé are advisable to increase their assets and reduce their liabilities in order for them to increase their book value per share. Nestlé and Ajinomoto are suggested to improve their cash flow so that they will be able to pay their shareholders. Next, Ajinomoto and Cocoland need to increase their earnings per share as well as the price per earnings ratio by increasing their revenue, where they can selling a large volume of products and increase the average price of the product.